the demand for silver for industrial use is exceeding the supply, and that gap is going to get bigger and bigger as the years go by. The only way you can fill that gap is to recycle silver, and to recycle silver, that means people bringing in their candlesticks or somebody taking their silver coins or their silver bars and cashing them in, or selling an ETF and they sell it back to the market. The only way you could supply that gap is with higher silver prices. So I do think silver prices will continue to drift higher. We've turned the corner on the gold price. I think we've kissed $2,000 goodbye. I think the next stop is $3,000. My personal view is we're going to be heading, if we're going to try and keep pace with the level of government debt, we should be well into the 5,000s by now.
The global silver market is entering a transformative phase, with the metal gaining prominence as an industrial commodity and a strategic investment asset. According to a recent report by the Silver Institute, silver's role in green technologies, such as solar panels, electric vehicles, and advanced electronics, has cemented its importance in the global transition toward renewable energy and electrification. This shift is driving a sustained rise in demand, contributing to a projected supply deficit of 182 million ounces in 2024. The supply-demand imbalance in the silver market is further underscored by limited mining output, which has been declining for over a decade. Clive Thompson, a market analyst, notes that in 2022, a deficit in silver supply appeared for the first time in more than 10 years, widening in 2023 and set to grow further in 2024. This structural deficit and rising industrial demand makes silver a vital resource for industries and investors. The impact of these market dynamics is already evident in silver's performance. Data from the World Gold Council reveals that silver has been the standout performer in the precious metals sector, achieving an impressive 42.4% gain from January through October 2024. Analysts are optimistic about the metal's price trajectory, projecting it to rise from approximately $31.30 per ounce to over $40 by the end of the year. Silver's dual role as an industrial metal and a safe haven asset positions it uniquely in today's economic landscape. The sustained demand from technological and industrial sectors, particularly for electronics and solar energy, is driving upward price pressure. Thompson highlights the likelihood of heightened price volatility, with the potential for sudden, dramatic price increases. The recent sharp price movements reflect the fragile balance in the silver market, where supply constraints and rising demand create fertile ground for rapid price action. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I have never been able to discover any evidence of manipulation. I mean, I'm not close enough to the market to say that's true. Certainly there are sellers who go short in the market, and that would include some very big boys with deep pockets. But I would rather look at the supply and demand and where silver is going. Now, a lot of people have got their eye on a $50 price. And the reason they got their eye on a $50 price is because that's where it peaked back in the 1980s. But if we adjust that number for inflation, that $50 price really should be well over 100, perhaps 150 or something like that. So how high can silver go? I think it can go an awful lot higher. The real situation we've got with silver is a supply and demand imbalance. The industrial demand plus cutlery, jewelry demand exceeds the mine supply. The mine supply of silver has been dropping for the last decade. It's lower now than it was a decade ago, and it continues to drop. Whereas at the same time, the demand for silver, particularly from electronics, is rising rapidly. So the electronics use of silver, driven in part by the photovoltaic industry, is rising by about 20% a year. That's not likely to stop because we're going to have more and more electronics year after year. So in 2022, for the first time, at least in more than a decade, we had a situation where there was a deficit of silver relative to mined silver. That deficit became bigger in 2023 and is likely to be much bigger in 2024. So we're in a situation where the demand for silver for industrial use is exceeding the supply, and that gap is going to get bigger and bigger as the years go by. The only way you can fill that gap is to recycle silver. To recycle silver, that means people bringing in their candlesticks or somebody taking their silver coins or their silver bars and cashing them in, or selling an ETF and they sell it back to the market. The only way you could supply that gap is with higher silver prices. So I do think silver prices will continue to drift higher, maybe go in spurts, like the one we saw a few weeks ago, when almost in days, silver went from around 30 low 30s. It rose by 6% in one day, 7% in one day. It went up to 35, maybe $36. And then it's obviously pulled back now by about 20%. So we could have those sort of moves, sudden, sharp movements, and it's very hard to burrow down and find out what causes them. But when they do happen, what it does do is cause all the shorts to run for cover. So when the price move starts, all those people who are short, there'll be an equal number of people who are short and long, all those who are short suddenly say, oh my God, it could be on its way to 50, and then they rush to cover, and that causes more buying, spiking the price higher than it should be.
Gold prices continued upward on Thursday, marking the fourth consecutive day of gains. The precious metal's safe haven appeal was bolstered by heightened economic and geopolitical uncertainties, with global stock markets under pressure. Notably, investor sentiment hit after Nvidia's revenue growth forecast failed to meet expectations, dampening the recent enthusiasm surrounding AI-driven stocks. Rising geopolitical tensions have further supported the demand for gold. Economic concerns also weigh heavily on investors. Clive Thompson highlights that one of the most significant catalysts for gold prices today is the growing unease over U.S. government debt and expanding budget deficits. While lower interest rates have a modest positive correlation with gold prices, the more significant driver of market sentiment remains the alarming trajectory of federal debt. According to the U.S. Treasury, the national debt now exceeds $36 trillion, nearly quadrupling since the pre-2008 global financial crisis era and growing annually since 2001. The sustained rise in debt, coupled with projections of worsening budget deficits, paints a concerning picture. Debt levels are increasing faster than the economy is growing, creating an unsustainable situation, Thompson explains. These fiscal challenges amplify gold's allure as a store of value and a shield against economic instability. Let's get back to the interview.
There is a fairly weak correlation between interest rates and the gold price. In other words, falling interest rates are positive for gold, but it's a weak correlation. It's not and it's certainly not the major one. I think the major one affecting the gold price at the moment are worries about the level of US government debt and the fact that the budget deficits are forecast to grow larger, and there's, as of now, no sign of the US government addressing those problems. To solve it, they would need to have a mixture of raising taxes and lowering costs. And of course, the political will to do either of those is not very high. So the feeling is, and not only the feeling, the projections from the US government's from the Congressional Budget Office, the projections are that that deficit is going to grow and the level of debt relative to GDP is going to grow. What does that mean? It means the debt levels are increasing faster than the economy is growing, and that means that it's in an unsustainable situation. And it's not just me saying that. We have very venerable people like Jerome Powell who've said this is unsustainable. I won't go into the long list of people who've said it, but everybody who's in the know basically knows it can't continue like this, because at some point something breaks and then all hell breaks loose. Traditionally, gold and silver miners outperform on the upside and underperform on the downside. We've had a decade when that's not been true. If we were to return to some sort of normality for the gold mining sector and the silver miners, the price of those shares probably would have to double from here just to keep pace with the present gold and silver prices. I think the reason why we've had this underperformance, we obviously had this decade from about 2012 onwards to 2021, 22, when gold was doing nothing. It sort of went into a giant saucer shape and didn't really go anywhere. The problem with that was a lot of people were looking at the massive bull market going on in stocks and saying, my God, I'm missing out on the latest hot stock. Where can I get the money? And they look at their portfolio and they say, I've had this gold mining stock for 5 years or 10 years or 3 years, whatever it is. It's a dog. Sell it. and then they go and buy Nvidia or Microsoft or Apple or Facebook or whatever the hottest stock of the day is, whatever they've got their eye on. So I think what we've had is rotation out of gold mining stocks into the, let's call it the Mag 7 for simplicity, and people are chasing hot stocks. At some point, the mining stocks will be the outperformers. We're not there today, but at some point they will be. And when that happens, I think we'll see that money coming back into the mining stocks, propelling them much higher. So one of the problems the mining sector has faced is rising costs. In the last couple of years, we've seen the cost of mining rising by something like 35%. That's since 2020. And the reason for that is mainly labor costs going up. But of course, with the gold price rising much more than that, we've got this leveraged effect on the bottom line. So gold mining companies are this year reporting absolutely outstanding results, and it's only a question of time before that starts to get reflected. There's probably still a lot of people who don't quite believe that gold's in a bull market. They say, it goes up and it goes down, it goes up and it goes down. But I think we've turned the corner on the gold price. I think we've kissed $2,000 goodbye. I think the next stop is $3,000. My personal view is we're going to be heading, if we're going to try and keep pace with the level of government debt, we should be well into the 5,000s by now.
Rising demand, supply constraints, and economic challenges shape the silver and gold markets. These dynamics underscore the growing significance of precious metals as industrial resources and safe haven investments in an uncertain global landscape. How might the increasing demand for precious metals amid economic and geopolitical pressures influence market trends and investment strategies? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.